Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 11th, 2016. So, contrary to many commentators believe, stocks did not collapse, and we'll look at that. In fact, the Dow Jones and the Russell 2000 hit all-time highs. S&P 500 itself is also close to all-time highs, and the financials hit all-time highs as well. We'll look at utilities that were pressured, but I don't think they're yet bearish, outright bearish. On the contrary, bonds, I think, may have entered the bear market. We'll look at the dollar, which have spiked lower, but ultimately the lower prices were rejected, and we saw higher prices for the week for the dollar. Of course, this is extremely bearish for the precious metals and for the gold miners. We'll look at oil, which could be headed in the upper 30s within a few months. Look at natural gas, which is attempting to bottom, and finally we'll look at copper, which now I think is bullish. So one thing I wanted to point out to people, to my listeners, is that in this business, it's what I learned over the many years I've been trading, is that you have to be extremely flexible in your thinking. You cannot get married to one idea and just run with it. And conversely, if you think something is bullish, you can always change your mind. Something is bearish, you can always change your mind. So don't get married to one idea and completely disregard all evidence to the contrary. So that's exactly what happened during this election night. I actually took a screenshot of the election during the evening. I was watching the elections, I was watching the charts. So on November 8th in the evening, as Donald Trump appeared to be winning, the markets, the S&P 500 reacted very negatively, and you can see there was a big drop. I think this was about around 5% for the futures. Conversely, you can see the dollar also dropped very significantly, and the gold by extension rallied strongly. The government debt actually gained a little bit in the early hours, in the late hours of November 8th. But I think what happened is once the elections were called and Donald Trump did reach his 270 electoral votes, what happened is we had a complete reversal. In fact, you can see this big spike, and this is a hammer candlestick. This is a rejection of lower prices. So what happened is he spoke in a conciliatory manner, and just the way he spoke, I think, really resonated well with the market participants, and they started buying. In fact, they were buying throughout the night, during the British session, the European session, and then in the morning, same continued, and we got buying throughout the day, and actually got a follow through on Wednesday, so Thursday, Friday. So basically, we had a complete reversal of thinking, from what the polls are predicting, and how the market reacted to the events. Myself included, if you listen to my previous videos, I thought that if Donald Trump will win, we were going to get a collapse in the S&P 500. In fact, we did get it, but what we couldn't have predicted is, I think, his conciliatory speech and his posture during the evening hours of the election. So the end result looks like we still have a bullish uptrend in the stock markets. In fact, here is the Dow Jones Industrial Average. It broke out to all-time highs, and in fact, you can see there's 5 candles in a row. We broke out to all-time highs. This was a bear trap. Classic definition of a bear trap. It broke below support and then immediately rallied back up. So, very difficult to predict this kind of thing, but this is just what we have to be prepared for. As I was saying, S&P 500 and vast majority of the stocks, or rather stock funds, it's listed in the United States markets, are bullish, and this turned out to be a hell of a buying opportunity, just like the Brexit as well. Having said that, there are some divergences. You can see we have made a fresh high in the index itself, but we are still seeing, we have not yet seen a fresh high in on balance volume, in advanced decline lines, and advanced decline volume lines. But here's one indicator I really like to follow is intermediate term breadth momentum oscillator. You can see that we're still in negative territory. So what this tells me is that we have room to run to the upside, because you can see that we had, for example, here it was still negative, and then we continued higher and we still had room to run to the upside. So even though these are all-time highs, I think we're going to probably see somewhat of a pause and continuation of a rally in the weeks and months ahead. Here's ETF. Here's S&P 500 ETF SPY, also very close to all-time highs, 218.31 or 218.50 before. S&P 500 is more diversified, and also there's quite a bit of technology present in the S&P 500. Technology has been lagging a little bit in the past few sessions, but nevertheless we're very close to all-time highs, so that is also a bullish occurrence. There are still divergences, but again, I'm not sure how much importance to assign to this. And again, this intermediate term breadth momentum oscillator, you can see we're still in negative territory, so we could still see quite a move to the upside, continuing follow through. Here's the underlying index itself, S&P 500. Pointed out, this is my my proprietary market breadth index. It never even budged. It was always in the +5 territory, so it was strongly bullish market still. We did get a little bit oversold on one of the inputs, and I call it raw MBI, so it's percentage of stocks in an uptrend, and we got a little bit overextended to the downside, so this apparently is a buying opportunity. As far as the longer term breadth indicators, firmly in bullish territory. This is percentage of stocks above 200-day EMA and bullish percent index. We didn't even drop below 50%, so we were still in a firmly bullish territory. So I still think that long-term S&P 500 and United States markets, and actually vast majority of the world markets, are in a bullish uptrend. Here's the S&P 500 on a weekly time frame, and last week I pointed out the support break, and I thought that we are going to be retesting Brexit lows. Clearly that did not happen, and looks like we have negated the support break, and like I said, I think this is a bear trap. Here's IWM, Russell 2000, all-time highs. Very incredibly strong move. Again, same thing. I think this is a bear trap. We went below the support and then immediately, like a gap. Look at this gap, rallied above it. Financials. I'll talk about the bonds a little later, but bonds have dropped, yields have surged, so financials, basically banks, are benefiting from higher rates because they can lend out at higher rates. So financials are surging to all-time highs. There is a large percentage of financials in the general S&P 500, so this is certainly helping the general market as well. Now, utilities did come under pressure, under selling pressure. So the reason for that is they are somewhat more dependent on the interest rates. And when I say somewhat, I don't mean a lot. I mean they are more dependent on interest rates, but not to the degree where I would associate utilities with bonds. I still associate utilities with stocks. So we came down rather hard in the zigzag manner. Basically, we came to support. I'm not 100% yet that we have broken the support, because we didn't really close below it, and even if we did, I'm not sure that I will be comfortable shorting utilities for several reasons that I'm going to be presenting. one negative thing about utilities right now is that the bullish percent index is in a rather negative territory at 21%. So what I did is I plotted out utilities on a longer term time frame. This is Dow Jones Utility Average. This is a weekly chart going back to 1996. So it's a little bit busy chart. I'll go through it slowly. So basically here, first of all, we have correlation coefficient. So correlation of utilities to S&P 500, even though it kind of zigzags quite a bit, I still think that it spends most of its time in a positive territory. So I still associate utilities with stocks, and I would group them mostly with stocks. Occasionally we get negative correlation, but they're not that strong, and usually it returns to the positive correlation. So in other words, what utilities are doing, the S&P 500 is also doing. So first of all, again, I'm going to posit that utilities are positively correlated with the S&P 500. So here's that bullish percent index, and what I did is I created thresholds for this index. Whereas if we go above this green line, which is about around 70% or so, then we're going to consider that we're in a bull market. And if we go below this line, we're going to say that we're in a bear market for utilities. You can see that right here we got a whipsaw, but here was a good signal. Here was a good signal, the bullish signal, and then here's a really good signal as well, bearish signal. Here's one excellent signal, bullish signal, very good signal, bearish signal, and a pretty good bullish signal as well. Now right now we have a bearish signal right here, right there. So here down below is my proprietary market breadth index, which, as I said, tracks, it attempts to see if the S&P 500 itself is in a bull or a bear market. And I think it does a better job than the pure bullish percent index for utilities, even on this chart. So we can see that market breadth index here in 2000 dropped into the negative territory well before the bullish percent index. So if you were shorting it, you would be shorting it up here. So that would have been a much stronger gain. Here was a little bit late. It would have been right here, but not that far off, I think. But this entire thing, whipsaw, would have been completely prevented if I simply followed market breadth index. So in other words, here I would not have looked for shorting opportunities. I would have continued to look for only going long here. Same thing here. We can see that we basically timed about the same, and the same thing here, timed about the same. So right now, market breadth index is nowhere near a bearish territory. We're still at 5. We came out of the bear market, and we're not even remotely close to a bear market for stocks. And like I said before, I think that utilities correlate highly with stocks. So I would not be surprised if utilities hold support, turn around, and continue higher from here. Here's utilities in a weekly time frame, and you can see that we're still sort of right around the support area. If you say that this is support area, then we're right there, and I think we could see kind of like bottom in action, and eventually we can rally from here. So again, even though the bonds have come under pressure, I don't think utilities are going to be dropping much more, and most likely will rally with the rest of the stock market. Here are bonds, and this looks much worse than some of the other charts I've been showing. So first of all, these are all-time highs. So up here I was warning to certainly avoid buying up here and look for a correction of some sort. We got a correction of some sort, but then we got a support break right there. We got a first support break right there, so this was a minor support break, but this was already of importance right here. So we got a support break right there and attempted to rally. Then 200-day moving average acted as resistance. Then we basically collapsed. It was a big gap. This is during the elections. right after the election. We basically collapsed with a big gap down and continued lower and closed next to the lows for the week. So this certainly does not look good for TLT. In fact, if we go to a weekly chart, you can see there's just big red candlestick on a very large volume. So there is lots of selling in this area. With this one candlestick, we took out several months of, well, almost, let me see, from, about here. So we took out like, let me see how many months of, about 20 weeks of gains in the price. Completely broke the support. Took out this support as well at 125, 125.45, and now we're close. So we're at 122.04. So I don't know. I don't think this is a bullish chart anymore, honestly, and I would either avoid it or possibly look for a shorting opportunity. Now, it does look a bit overextended to the downside, so I would not be surprised if we see some sort of maybe like a rising wedge and then a plunge lower, or maybe like a rising, or maybe a flat consolidation and then another leg down. I somehow seriously doubt that we're going to see fresh all-time highs at this point. Here's AGG, diversified bond ETF, same general picture. It was a little bit better looking here because I thought we held support, but then we basically broke it with a gap, continued lower, and ended the week on a very sour note here. Again, same thing. I think we're maybe a little bit overextended, so possibly we'll see some sort of a rising wedge or maybe a flat consolidation. And then again, as I said before, for TLT, I don't know if we're going to be re-challenged this highs. Maybe we'll get back to this broken support. So this clearly was not a flag pennant, because I thought here maybe this was a flag, still a flag, and we could still break out, but we didn't. And this looks like a support break, a bona fide support break, so we could see further pressure. Now there's quite a bit of support here at 107, so we could see 108 maybe. Maybe we can see AGG come down there and trade sideways. But with the Federal Reserve poised to raise interest rates in December, I don't see fresh all-time highs for AGG or TLT anywhere in the next few months. All right, moving on to the Forex universe. Here's US dollar on a daily time frame. Look at this spike. This is an enormous spike down. And for currencies, if you trade currencies, this is a very large move. This is a 2.3% move for the dollar, and I showed this move right there during the election day. You can see dollar was really in a panic mode. People were selling the dollar. But again, the world did not come to an end. Donald Trump, I think, did the right thing with his conciliatory posture, and then the dollar rallied right back up, and basically we are again challenging this high. And the next chart I'll show, I think we could easily challenge this 100 point level, 100.6 level. And again, if we break out of this 100.6 level, we could see a continuation. We could see like this entire move duplicated on the upside. So we could see like 18-20%. It just depends on where you measure. We could see maybe this much, 12% move to the upside. And when we get to the gold, I'll show that this will be quite bearish for gold. Here's euro versus US dollar in the daily time frame. You can see the opposite. Basically, DXY, the dollar index, is heavily tilted towards the euro. It's like 50% euro, so it makes perfect sense. The last couple of videos I pointed out that we broke These two supports, I wasn't 100% sure about this support. We did break it, but then we rallied back up. But looks like now we have this big rejection spike, and this support seems to have been taken out. Here's that weekly time frame. This is a very bearish candle, by the way, on the weekly time frame. This has attributes of rejection and continued selling throughout the time period. So there is support, and I think it's pretty good support here at dollar at 108.20. But I think if that support is broken, we could easily re-challenge this lows at 104, 105 here. Here's British pound versus US dollar. I thought that we were a little bit overextended to the downside, and I thought that we were going to be still moving higher. Again, I think the support, resistance turn support needs to be retested. In fact, let me put it in there. Here's auto support resistance, so I can put it in there right now, about here, I would say. So, I think British pound may come up to this area, and I would be, it's a good place for it to fail, but it could come up around here at 134 and fail there. But I just don't see it turning around into a bull market just yet. In fact, here is the British pound versus US dollar in the weekly time frame, and this are 30+ year lows. So I just don't see it. There needs to be a bottoming process. In fact, when we get to the US dollar versus Japanese yen, I'll show you what I mean by the bottoming process. I'm not sure that this bottoming process is has even begun yet, honestly. Okay, here's what I mean by the bottoming process. Here's US dollar versus Japanese yen. 52-week lows, in fact multi-year lows, because you can see that this is below this low in 2014. But then see how we kind of came up and hit this place, hit this area again, bounced again, hit this area again, bounced again. So this latest week, we again almost touched that area at 101, but we clearly rallied. And you can see this is a very bullish candle. It has attributes of rejection of the lower prices and also continued buying throughout the time period. We closed next to the high of the time period, week in this case. So this is a very bullish candle, and I think we have turned around in the US dollar versus Japanese yen, and in other words, US dollar will be gaining in price versus Japanese yen, and by extension, this will help the DXY, the US dollar index, as well, because it's composed of mainly of euro, Japanese yen, and the British pound. All right, let's get to gold, and here's gold. In fact, let me show you what happened during the elections. Big move up. Look at this bullish looking candle, very beautiful looking candle, except for it morphed. And it morphed into something completely different. It morphed into this. It morphed into this big rejection spike with a close next to the bottom. So this is a classic shooting star candlestick. Basically, resistance was reaffirmed here at the broken support, and it happened on an enormous volume as well. So right now, what I see here is a possible bear market in gold. I'm getting more and more, getting closer and closer to outright calling it bearish, but I think this critical support and some other breadth measures that I follow may need to deteriorate a little bit further for me to outright come out and say that we're in a bear market for gold. There is now some very slim chance that gold may come out of this, and it needs to basically prone to a rally and completely negate this really terrible looking spike. Again, the reason for this is because of the dollar. Dollar and gold traded. Gold is priced in dollars, so if dollar gets stronger, gold gets weaker. It's pretty straightforward. Here's gold on a weekly time frame. Again, extremely bearish looking candle. Like I said before, it has attributes of rejection of higher prices and attributes of prices closing near the low of the time period. So this is a very bearish looking candle. And this is also an enormous volume, and this is a weekly volume. So, we had a broken support, a rising wedge, and then a rising wedge break. So this is a rising wedge right there, 1, 2, 3, 4 candles, and then this is a rising wedge break. So critical support is at 1200. I think if that support is broken, this could be like a head and shoulder kind of business. And we're basically in a bear market, and this is a multi-year lows. So we could get back there quite easily. Again, anything is possible, and you have to keep your mind open and flexible. And it's possible that we hold here and we don't enter a bear market. Here's GLD. This one is not traded throughout the day, so there are big gaps here. But for illustration, it actually is better illustration, because you can see we broke the support with a gap down. This is a rising wedge I was talking about, and then we held this resistance. This resistance was reaffirmed. So first it was support, now it turned into resistance. We had 1, 2, well, I guess 3 attempts, because we kind of tried to get up there, but we failed. We had 1, 2, 3 very strong selling candles this week. And then we took out this low, and we're gaining on this low here from June. GDX is a lot worse, because we took out already this low from June. You can see from GLD we didn't yet get there, but for GDX we already got there and we took it out. We closed below it. We didn't just intraday took it out, we closed below it. So again, it's possible that I'm wrong and we could still rally from here, but it's getting less and less likely. Also, I wanted to point out that I showed this multiple bearish divergences here. This one has been resolved now, because we now have a lower low, so I will remove this divergence. And also this divergence I pointed out right before it actually plunged. So we had a prices made a higher high, while the under the hood measures, the gold advanced decline line, advanced decline volume, and unbalanced volume made lower lows. So we did resolve this divergence as well. So all of these divergences have been now resolved to the downside. Now, here's that bullish percent index, which I was worried about as far back as October, beginning of October, and I was already thinking that this could be a bear market for gold, because we were basically in a bearish territory. We're very low on the bullish percent index. Now we're even lower, we're at 14%, so only 14% of stocks are on a bullish percent on a point and figure chart buy signal. Now this could be a little bit overextended, but knowing GDX, this could push to 0. And again, we're very close to an outright bear market. I do have a gold breadth index, which is still pointing that there's a possibility of a bull market, but if we get any more deterioration, we could just unravel completely. Here's that weekly time frame for GDX, and why I'm keeping my mind open is because this could still turn into a bear trap. So now we had a plunge below support on very high. In fact, this is an all-time high volume, enormous volume here. But it's possible that we are going to negate this support break and rally higher. If we don't, this could be like a head and shoulders kind of pattern. And if this is indeed just this pattern itself, if this is indeed a head and shoulders pattern, this is 30% depth, so we could see a move down to basically all-time lows here. Okay, moving on to the hard commodities. West Texas Intermediate, light crude oil. So this was the spike during the elections. and this looks like a hammer candlestick. Looks good. So maybe we see some support here because we have quite a bit of touches in this area. So this is 4 touches in this area at 43 and change. It's possible that we hold here, and maybe we are going to attempt a rebound. This will depend on many factors. OPEC cutting production. I don't know. I always kind of looked at them at that possibility as a far-fetched possibility. Think about it. If you have a glut of something and there are still decent prices for it, wouldn't you want to sell it? And the United States producers, again, they're holding back capacity. So even if OPEC decides to cut production, United States producers will just come in and say, oh, we have now opportunity to sell our oil. So also, if Donald Trump will remove restrictions on drilling, don't you think that it will decrease the prices of oil because there will be more oil available? So I just don't see higher prices really, significantly higher from here. So for now, what I see here on the weekly time frame, I see a reaffirmed resistance in the $54 area here, 52, 54. For now, I see reaffirmed resistance. If we break this 43, we could easily retest the $40 area here. Here's that upper 30s, 39. If this is taken out, then it easily can drop to $39 or so. Here's natural gas. I think this is a bullish chart. I think we are coming down again in this $2.50 area. And, well, at the very least, attempting to hold here. Now, this is kind of like a line in the sand here. So I think if we break below this, we could be back in a bear market for natural gas. In fact, here is the weekly time frame. We got this breakout above $2.50. Continuation to 52-week highs. Now it kind of came down rather hard from the 52-week highs, and if we break $2.50, I think we could be again, in a bear market. But so far we haven't gotten there yet, and I think we could still hold here. In fact, we have quite a bit of, we have 1, 2, 3 candles that are showing buying interest right now. So natural gas for now, I'm treating it as bullish, and this is basically we're more or less at support. So last week we looked at copper, and I thought that we are attempting to break out. We're kind of getting close to a breakout. I was still looking at copper as a bearish security. Again, I have no problem for it being bullish. I have no attachment to it really whatsoever. So this week we got that breakout. In fact, I think those are 52-week highs or multi-year highs. Let me see. Yeah, those are multi-year. Well, no, those are 52-week highs. But still, the point of the matter is that we did get a breakout, and right now it seems to be bullish. So in other words, I'll be looking for buying opportunities. So looks like we have more or less bottomed out for copper. Maybe we retrace some. I don't know where we're gonna retrace to. Maybe we retrace to the breakout point. $2.30 here. To like here, and then eventually bottom out and continue higher. I have no problem with copper being bullish again, and like I keep saying, in this business, you basically have to be flexible in your thinking. If something yesterday was bullish, and today it could become bearish, and vice versa. So keep your mind flexible. Anyways, if you like what you're hearing, please consider signing up at MasterChartsTrading.com and stay tuned to how to find us on the internet. Thanks for watching. Have another great trading week. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now. So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the successes in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.